If you're self-employed and you've ever tried to qualify for a mortgage, then you likely already know the pain. You might be depositing $20,000, $30,000 a month into your business. However, your tax returns show about $14 in net income and nothing but a dream. And guess what? Typically, banks only look at that tax return for qualifying. Today, I'm going to break down a loan program that allows you to qualify based on your actual income that you're depositing to your business. That is not based just off of what the IRS thinks you make. So let's break down bank statement loans and why they are a game changer for entrepreneurs. If I haven't met you yet, my name is Connor Webb. I'm a mortgage loan originator licensed in Washington, Oregon, California, Idaho, and Arizona. I've been doing this for a decade now and have helped tons of entrepreneurs, business owners get approved via bank statement loans. If you have any questions whatsoever about the process, feel free to reach out. You can visit lenderconnorwebb.com and make sure to like and subscribe to this YouTube channel for more content like this. And with that, let's get into why a bank statement loan is such a game changer for entrepreneurs. As I described here, it really is a completely different path to getting pre-approved when you're self-employed versus when you're an employee. This scenario over here on the left, you might be depositing $20,000, $30,000 a month into your bank statements. However, your tax returns only shows, let's call it $45,000 net for the year. Your net income, of course, is your total revenue. Subtract out your expenses or your write-offs. And as a smart business owner who is looking to potentially lower their tax liability, it might make more sense to write off various expenses throughout the year. But unfortunately, for qualifying for a home purchase, it doesn't really help you out. So why exactly is it easier for W-2 borrowers to get pre-approved to purchase a home? Well, in short, the income piece is much more straightforward to calculate. Income for a W-2 employee might be considered more consistent and it's documented by pay stubs. And when looking at documenting qualifying income, if someone is making a salary or an hourly rate, this is very straightforward. It's a fixed income. Even if someone is making a bonus or commission, which is a variable income, you're able to document the past 2 years of income for those amounts. Average it out, and it's a much more straightforward process than when you're self-employed. When you're an employee, there of course is no business write-offs, which impacts your qualifying income. You're able to use the full income that you actually make as an employee. And with that being the case, debt to income ratios might be more straightforward to calculate. And so why exactly is it so hard for self-employed individuals to get pre-approved? Well, as I mentioned at the beginning, often tax returns don't tell the full story of how much a business owner is making. You have your top line revenue and likely you're writing off various business expenses, which can drastically reduce your taxable income. With self-employed individuals, income might fluctuate month over month dramatically. It's not as fixed as with a W-2 employee. And when lenders are looking at self-employment income, they have to essentially gather the past 2 years of tax returns. They look at that net income number. They then average out that net income number over the past 2 tax returns, which could potentially reduce your qualifying income even more. And so where bank statement loans come into play is that in this case, you're able to look at personal or business bank deposits instead of tax returns to figure out what your qualifying income is for a purchase. And so going this route allows lenders to calculate income based off of your real revenue, how much money is actually being deposited on a monthly basis into your bank statements, which, because you're not even having to look at tax returns, is ignoring many of the tax write-offs that a business might be writing off to reduce their taxable income. So those write-offs won't reduce the overall qualifying income. This really helps level the playing field for self-employed borrowers when looking at buying a home. So how exactly do bank statement loans work? Well, the requirements in general are going to be 12 to 24 months of business or personal bank statements. We'll get into how exactly you would calculate income based off of business or personal bank statements in a minute. But then often in most cases, we will need a profit and loss statement for the current year to show that the business and the overall revenue is on pace for where it was in the prior years based on the deposits from the bank statement. There is going to be a minimum credit score, as is standard for every other type of loan, but the minimum credit score might be a bit higher than if you were to be going with just a standard W-2 employee loan. The down payment that you're looking at is likely going to be higher than the standard loan as well. Oftentimes, we're looking 10, 20% down. In my experience, it certainly has been closer to the 20% number, but you might be able to find a certain program that allows a bit less. So how exactly is income calculated from these bank statement loans? Well, they look directly at the overall deposits that are going into the bank statement. They then might apply an expense factor depending on which account is being used for qualifying. And after the expense factor is taken into account, that would determine the average qualifying income that is able to be used for qualifying for a purchase. So are you going to use personal bank statements or business bank statements? That really depends on the structure of the business overall. With my experience of using personal bank statements, you're able to use 100% of the deposits counted towards qualifying. And the reason for this is because it is assumed that when you're depositing the money from your business into your personal account, that the expenses are already taken into account. The business received the revenue in the business bank statement. They also took care of the expenses, and now they are paying the individual directly to their personal account, and therefore they're able to use 100% of the deposits if it's a personal statement. Now, if it is 12 to 24 months of business statements that are being used, then there's going to be a 40 to 60% expense factor, which means that they will look at all of the deposits that are coming into the business bank statement on a monthly basis. They'll average that out, and then likely they will take 50% of that number as the qualifying income. And the reason for that is, as I described in the personal bank statement scenario, is that when there's deposits going into a business bank statement, it is assumed that the expenses haven't been taken care of yet. And because of that, they look at the overall deposits going into that account, they apply the expense factor, and then that gets you the total qualifying income. And with that, let's get into a little bit of a real life scenario. So looking at this scenario here, these are business deposits with an average of $25,000 per month. Since this is a business account, there's going to be a expense factor that is applied, which right here is the 50% number. So you take $25,000, 50% of that gets you $12,500 per month of qualifying income that can be used to qualify you for your purchase. Compare that to the original scenario at the beginning of this presentation where, $45,000 is the net income after all the expenses and write-offs are taken into account, and that is a massive difference. So with $12,500 per month being used for qualifying income, in general, you can go up to about 50% debt to income ratio, which means that you can get up to about $6,250 as your max monthly payment, including the new potential housing payment, as well as all of the minimum monthly debt payments or debt obligations that you might have. Versus this $45,000 that might be showing up on your tax returns as net income would be just $3,750 per month of qualifying income. You take half of that, and that's the potential housing payment that you can go up to. So the big benefits of a bank statement loan are: one, you can use your real income, not your tax strategy income. The advice that your CPA is going to give you as a business owner to reduce your overall tax liability is going to be different than the advice that your mortgage lender might give when you're trying to maximize your income for qualifying specifically for a purchase. Stop being punished for legal and strategic write-offs. If you are a business owner, definitely look at a bank statement loan at least as a second option. By going this route, this very well could allow you to unlock a higher purchasing power, more usable potential income, means a bigger loan that you can qualify for. With a bank statement loan, it is more flexible with documentation, no need for tax returns, W-2s, or pay stubs when we just gather 12 to 24 months of a personal or business bank statement. And like I mentioned from the start, this is great for entrepreneurs, whether you're a realtor, a contractor, a gig economy worker, a small business owner, someone that just earns 1099 income in general, or if you're in online business sales. Now, with this type of loan, there are potential drawbacks as well. So what exactly is the catch? Well, rates in general are slightly higher than the standard conventional loan, although they really aren't much higher. In general, you're talking 0.25 to 0.5%. Unless you have lower credit, then there might be more of a significant difference. But the average well-qualified buyer that's using a bank statement loan compared to a standard conventional loan, rates are very competitive. It's nowhere near like what a hard money lender would be giving you. As we also covered as well, the down payment requirement for a bank statement loan likely is going to be higher. And with these loans, they're not backed by Fannie or Freddie Mac because they are a portfolio product or a non-qualified mortgage product. They don't fit exactly within the box that Fannie or Freddie, the government-sponsored entities, would be backing. So there is a bit more assumed risk with bank statement loans. And with bank statement loans, you do need a strong bank history, really 12 to 24 months. In general, you have to own the business at least 2 years before qualifying with a bank statement loan, which is the same as if you were to just try to qualify at all as a self-employed individual. And ideally, good credit is going to be better for these programs. If one of these bullet points describes your situation, then a bank statement loan might be the right product for you. If you write off tons of expenses to reduce your taxable income, then this could be a great solution. Going in the same line, if your cash flow is strong but tax returns don't show it, then this could be the best option. In general, you still have to be self-employed for 2 years. So if you recently became self-employed, definitely reach out. There might be a product for you. If your income is trending upward, but last year's tax returns are low and you haven't filed your taxes yet to reflect that higher income, then a bank statement loan could be the option. And like I mentioned, bank statement loans and conventional loans are relatively similar in interest rates, so you might not even need to refinance later into a conventional loan if you don't want to. But if you have lower credit and you need to buy now, then you could use a bank statement loan, potentially refinance into a conventional loan later, and then see the benefit on a monthly basis. If you're self-employed, it could be a complicated process to get you pre-approved to purchase a home, but it really doesn't need to be. A bank statement loan very well could be the option to bridge that gap to getting you to qualify. And if you have any questions at all, here's my contact information. Make sure to reach out and let's connect, just have an initial conversation. You can visit lenderconnorwebb.com or just reach out via text or call. And again, for more content like this, make sure to like and subscribe to the YouTube channel. Leave a comment below if there's a certain topic you'd like me to cover, and we'll see you in the next one.